we are in an incredibly deep recession all the way through the second quarter of this year, certainly April, likely even potentially May, depending on which locations we're talking about, is in some form of a shutdown of non-essential parts of the economy. So everyone has now been absorbing that news. The key question is, if you're going to start to reopen up again, will it be something that is relatively quick? Will it take a very long time? Will it be very slow? Or will you be going through a series of stops and starts again, where you start to open up, and when you realize you've gone a bit too far, you see a reversion again with further outbreaks of the virus. And that challenge will be with us until we get either towards the herd immunity, a much higher portion of the population that we're confident already has or has had the virus and has the antibodies, or we'll need to get to a stage where we're confident that some sort of vaccine or some treatment is available, which is reducing the expected fatality rate to make it more likely that you will end up actually seeing economies opening up again. But all these things are very, very uncertain. And in the meantime, to give guidance on where we go in the next year or more is even more difficult as a result of that.
How do you see the ripple effects playing out? How do you see the measures taken in by the Fed filtering through for the emerging world?
Well, it's hard for other central banks around the world, particularly any central bank that knows that their economy runs double deficits, current and fiscal deficits, to really be able to do everything that, say, the advanced economy central banks can do. It's unlikely, for example, that you'll see unlimited QE as we see in Europe or in the United States being implemented all across any emerging markets which have double deficits. But we are already seeing a lot more measures of bond buying, of stabilization of markets all across various economies where, especially in the case of running into the lower zero bound, or ones that have not yet done so, that they're able to take these more extreme measures because it's the thing that makes the most sense right now. And if any economy out there is worrying about whether any of these ultra aggressive policies will lead to inflation later, that's simply something to worry about way beyond the current crisis situation that we're in right now. So it probably gives more room for other central banks to take even more action themselves. Knowing that central banks can tap into Fed swap lines if more of them can, or indeed they can, instead of needing to sell their treasuries, swap them so that you can effectively do the same thing using, say, the repo market. That's all very useful to be able to support economies and also currencies so that the stability measures can take place.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.